But so far, the structure of it, there's room for profit. Structure of it is structure. I don't see like huge red flags, like
Yeah.
you know.
So is that a? So you said maybe earlier.
I said maybe, but
Yeah.
I'm leading 60-70% yes.
Oh, so you changed your mind.
Welcome to the closing table, where everyday real estate investors bring their deals to the top experts to get exposure for potential partners and investors. These top deal closer experts will ask questions, break the deals down, and cross-examine the guest to determine whether the deal is profitable or to be shot down. Winners will be inducted into the Closing Table Hall of Fame, where they will continue to receive exposure from the show. Who are the closing table experts? Meet the Kwak Brothers, who started out as college students, having over 75 rental units in just 1 year, and are now partners of a private equity firm investing in large-scale apartment complexes. And now, here's your hosts, the Kwak Brothers.
Hey guys, Daniel here. This episode, we got Mr. Scott Joseph, the man with two first names, 35 years old from Detroit, Michigan. He is an entrepreneur and also previously experienced real estate investor. Today, he's got a great multi-unit deal for us. Let's go ahead and take a listen. Hey, what's going on, guys? This is Daniel.
And Sam, welcome back to the closing table.
Today, we got Scott. So Scott, what do you have for us?
I have got a 25-unit apartment building in Kalamazoo, Michigan.
That's what I'm talking about.
Okay, where is it at, Scott? Sorry, before Sam rudely interrupted us.
Hey, this is big.
Kalamazoo, Michigan.
Oh yeah, I like Kalamazoo.
I know exactly where that is. In Kalamazoo, Michigan. All right, so tell us some more details. What are the numbers? Let's talk business.
Yeah, so I'm still trying to get firm numbers out of this guy. He's kind of a slumlord, but what I have is, as of right now, let's see here. Yeah.
Well, how is he a slumlord? Is he not doing repairs or not doing maintenance?
Well, he basically, I've kind of got this deal sent to me from somebody who I know that lives in the area, and he works with prison reform. So he kind of sends a lot of guys that come out of prison into this apartment complex. So that's how he kind of told me about it.
Yeah, and has that been a problem?
On LoopNet, actually.
Oh, it's on. So it's market. So it's listed.
Exactly.
Yeah. Oh, got it. So has there been any problems because of, obviously the tenants?
Not that I know of. I assume there might be some, but I know that rents are way below what market value should be. And I think as the rent rolls for the last couple of years, they've been kind of declining. So I don't know what's going on exactly over there. But
real quick, the tenants are not a problem. You said the rents have been going down every single year from what I hear in the rent roll, but for some reason the market rent's a lot higher. Is this a Class C apartment complex? I mean, what's going on here with the area?
Yeah, Kalamazoo is kind of hit or miss. It's kind of like Detroit area a little bit, but there is a Western Michigan University, which is huge, and Kalamazoo College, which are within a mile from this apartment building. So there can be some drug activity around the area, but I think this one, you can go either way with it. And I think the owner has gone, not as not a safe way, I guess.
Yeah. So basically, this guy is a slumlord. He's kind of like the king of the slumlord here.
I would maybe say that. Yeah.
Yeah.
So tell me about what's the condition like? Have you checked out this property yet? I mean, have you gone, walked around it? What's the deal?
I live 2 hours away. I haven't been over there yet, but I have like I said, my buddy, he went over there and checked it out. Okay. And I think the parking lot needs to be replaced. It has a brand new roof, luckily, but as far as interiors, they're all outdated and kind of a little bit run down.
I would imagine.
Yeah. So tell me why is it worth? Because I'm hearing some stuff about the area. Why would it be worth fixing it up?
Well, because I like it because it's kind of just one building in the middle of a neighborhood, and the neighborhood looks pretty safe and clean. It's not next to a bunch of crummy apartment buildings, so I like that part about it. So you could kind of, I don't know, force appreciation. It wouldn't be it wouldn't come down to value based off of what's around it. I
Okay.
think. So yeah, you could attract some college students. in
Okay.
there,
What's
sure.
obviously you haven't been in that or seen that apartment. Have you talked to any other individuals that are maybe in that area, and then maybe what their opinion about the building is?
I haven't yet. I really haven't. I'm just doing my first round of analysis.
Sure. Now, obviously, you're in the first round. I don't think we've heard anything about the numbers yet.
Yeah, let's get to the numbers. What are we looking at for gross revenue? What are they asking, and so forth?
Sure. So they are asking 1.2 million, and the gross income is 110,000
a month or a year?
That's the gross?
Yeah,
A year?
a year.
That's ridiculously low.
Yeah.
That is ridiculously
What's
low.
what's the rent on per unit then?
About $600.
Yeah, there it is.
Oh, okay.
Okay, so
550, 600.
what's the net?
The 2019, I don't have 2020, but 2019 is 40,000 about.
That sounds about right.
Yeah.
So is that net including the debt service, or is that just net operating income as in no debt service? I know a lot of landlords, when they send P&L statements or when they analyze, they include the debt service in there, which you cannot do. But that's $40,000 a year net. So you're meaning to tell me this property has $70,000 worth of expenses a year?
That's what it looks like to me.
Okay.
Yeah, without the debt. Yeah.
Without the debt. So
Okay.
what's the debt that you're gonna get on the property?
That's I apparently he is willing to do seller financing, and he wants us to just pay his debt, which is around $250,000. So
That's the remaining balance on the loan?
yeah, I believe so.
What's his monthly payment?
I'm not sure.
Wait, so let me get this straight. So he's asking for 1.1 million or 1.2 million.
1.2. Yep.
He just wants you to pay cash for his debt and then pick up the rest as a seller financing. Is that what I'm getting
Right.
at?
Exactly.
Okay.
Yep.
Interesting.
Well, let's run the numbers real quick, right? So, I mean, Sam, you can ask him another question if you want, but I'm going to calculate what that debt service is going to look like based on
On a 30-year fixed.
current. Well, you're not getting a 30-year fix, not right now.
Yeah. You think he's gonna have to do a 5-year arm type of a deal, 5-year term? Or
No, what banks are doing a lot now, Scott, just for the record, they're doing what's known as swap
Yeah.
rate financing.
Right.
The rates are ridiculously low right now. So what most banks are going to give you is they're going to give you a 5-10-year fixed with a 25-year amortization. It's very hard for a commercial bank to give you 30 years right now.
Run that debt service.
Every bank that I'm talking to right now, they're doing 20-year amortizations, right? If you're lucky, you're going to get a 25-year amortization. So let's say you get 4.5% interest. Let's put it at a 25-year amortization based on a $250,000 down payment, which is 20.8%. Your monthly payment is going to be $5,280.41. Multiply that by 12. 5,280 times 12. You're looking at 63,360,
Right.
which puts you at negative $23,360 a year.
Right.
Scott, what are your thoughts on that?
That doesn't sound too good.
That doesn't sound great at all, does it?
Well, so I mean,
No.
well, let me ask you this, Scott. Here's the crux for everything, and I see a lot of moving parts, and I don't like moving parts. Moving parts means risk. But here's one of the moving parts that I do want to ask you is what is a going rate for those types of units if you were to turn each of the unit over?
What would the rent be?
Yes, sir.
Yeah.
Sorry. It would be easily $800.
Okay.
You're saying you can get it up from 600
conservatively.
to 800.
Yeah.
So here's what I'm saying. I'm going to give you a shortcut. He gave you the numbers in a profit and loss statement, correct?
Correct.
I'm going to have you do two things. Number one, you're going to ask him for his Schedule E. That is the tax form that he's going to file to the IRS for income and expenses. It's not that hard to get. You tell him, hey, go call your property manager, or hey, you pick it up yourself. It's a 5-second spiel. There should be no problem getting it to you. Here's what I'm curious about, and maybe
I actually have that.
you have
I
it.
actually have that in front of me.
So great. You're one step
Yeah,
ahead.
sorry.
You must have been following us for a long time. But
Yeah.
here's what I want to ask you then. Out of that $70,000 a year in expenses, how much of that is vacancy?
4 or 5 units vacant right now.
Right now.
There's 5.
right now.
There's six units.
Okay.
Yeah, and
So-
and there's also 3 other people that are on the list to be evicted. So
So
there's a lot of
first
mess
question,
going on.
Scott, is this the type of stuff you want to be dealing with?
Yeah, it seems it's a lot of hands-on.
Yeah, it's a good question. I'm kind of looking at it as, stabilizing it, raising the value, and doing kind of a burst strategy on an apartment building. Now, that's kind of what I do with single-family homes. So,
Okay.
I'm thinking maybe we could bring the value up to 1.8 million or something like that.
And you want to? Why do you
But
want
I'm-
to? Why
I'm
do you
new
want
to
to burr?
apartments.
If you're, I understand that, but if you're getting seller financing, by the way, he's going to give you a killer steal on the interest. If I were you, I'd shoot for 3% because that's going to put you in a very good position. But if you're getting good financing on seller financing, you're getting 3% interest on a commercial loan, which is bananas historically speaking. Why not just keep it? Why are you looking to refinance?
I just wanted to get my original money back out.
Sure.
That's the main thing.
I'm not sure if the
Just
bank's
'cause
going
I
to.
have only a certain amount of capital, so
Sure.
I'm just trying to keep that going.
Yeah, I'm just not sure if the bank's going to allow you to refinance when you have another mortgage in place with the seller.
Yeah, well, I guess my idea was to do a seller financing, get it stabilized, and then maybe in 2 years or so, refinance, pay him off,
Yeah.
and hopefully, get all my money back plus some, and then hold on to it.
Well, so what I'm understanding right now, Scott, is you're gonna do $250,000 cash down to cover his debt. Is that what it is, or are you getting
Yes.
another loan on the 250?
No, that's it.
Okay,
It's just
so-
250,000, and then
Got
it's
it. So you're bringing your own skin in the game. 250,000. Everything will be pretty much, financed by the seller.
correct.
Okay. So, I mean, from the looks of it,
I don't think you're gonna be able to refi. I don't think there's enough there for you can get your money back and you can pay off the seller at the same time.
yeah, the problem is the price because right now, as is for what it's worth right now, is a 3% cap rate for this, 3% cap rate for this. So
Yeah, but that's not a fair judgment though, Sam. Because
because he's not throttled.
Well, not only that, but you're talking about something a property that's. I mean, in your opinion, would you say this is terribly mismanaged?
Absolutely.
Yeah, it's 3% as is, right?
3% as is.
You
sure.
know, it's because we don't, as you know, we don't do cap rate based on this is what it could be, right?
Yeah, but the upside is at least enough to where you got to consider it.
Yeah.
You know what I mean? You got to consider it. So yes, I agree with you. I think 1.2 is asking for a little too much. Is that what it's on LoopNet?
Yeah.
Yeah.
And I honestly, I don't know if I would pay that. I am not.
Don't.
I'm
Yeah.
new to analyzing them, so I'm thinking this as is right now is maybe worth 600, 700,
Right.
800,000.
Yeah.
Yeah, this guy's dreaming.
So
I mean,
Yeah,
you could
so
still
I'm
offer
just
the 250.
honest,
You know?
Yeah.
exactly. Yeah.
Yeah, the seller is
Yeah.
dreaming, man, with that 1.2.
He-
But yeah,
Yeah,
I think he sees the potential
Yeah.
though, and he's selling it as
Sure.
yeah, but the
some investor will
potential,
come along and do
has
the
to
same
come. The potential has to be your profit, not him, right? He can't
Sure.
profit off of your potential of making money
Right.
because right now it was his responsibility of managing this the right way. How do you manage this the right way and in a way that's very efficient and clean? Yeah, maybe he could walk away with 1.2. But right now,
Right.
he's gonna have to pay for his sins of mismanaging, and he's gonna have to. So, let me ask another question: Is Scott, did you talk to a commercial real estate agent to see what the going commercial cap rate is for this area? What some of the other apartments sold for?
Well, I haven't honestly.
Okay.
The brochure that they send out, they said it's being sold at a 7% cap rate.
I don't
That's
believe that.
that's BS.
I don't believe that.
Hold on. That's BS because
Yeah.
they're getting that number from the offering memorandum. They're not using real numbers. There's no way. There's no
yeah.
way. What?
No.
So do me a favor, Scott. Let's go ahead and get to a decision here. What do you think? Good or no?
A lot of moving parts. from the big picture, it sounds like it's gonna work. Price has to come down.
By how much?
Oh man, if you want to be at
how much should I buy it for?
if you really want to be at 7% cap rate, this has to go down to 600s.
No,
for sure.
Not that low.
Okay.
Has to.
Not that low. Obviously, Scott, if the lower you can get the price, great. But I don't think we're at the place in the market yet where you can offer half of what something's listed for and get away with it. You could do it in 2008, 2009, and I do believe a time is coming where that will happen again.
7% cap rate on what it is right now, NOI, the price is saying $571,000.
Yeah, I understand, but what I'm saying is that most likely the expenses are not correct, is what I'm trying to say.
Yeah, probably.
You know what I mean?
Yeah.
So, I mean, something's off because the brokers are saying it's 1.2 on a 7% cap rate. You're saying it's 570,000 on a 7% cap rate. Someone's lying, right?
Yeah.
You guys are using the wrong, you know what I mean? Like somebody's using the wrong numbers.
So
Here's what I would do, Scott.
Yeah.
Right? Buy the building. It has to cash flow starting day one. It has to, because I'll tell you right now, when you start raising rents, I've done this many times.
Yeah.
You're gonna have your vacancy start going up. In
Check
my opinion, you got a cash flow starting day one.
check the debt service again, assuming that
if you buy for Scott, if you buy for $800,000, your debt service is only about $30,000 a year,
which
gives you about $10,000 a year in cash flow.
There's some skin.
So you've got some skin enough to where you could raise the rents. But I mean, man, I think anything above 800, I think it's a no deal for me.
And also consider the fact, Scott, that you're gonna have to put potentially thousands of dollars per unit to turn this over.
Sure.
Cost of vacancies.
It's a lot of money.
Yeah. So this is gonna be like a 2 to 3 year project, but at the end, you're gonna have a stellar equity position. If you do end up refinancing, you're gonna have. I think you're gonna have enough equity to do so, if the price is right. And I think you'll have decent cash flow coming in. It's just a matter of, are you willing to deal with all the moving parts? Or can you get a good price? And can you deal with all the drama that's going to be involved in evicting these tenants
Scott,
one by one?
Do you feel like you're ready for that?
Yeah, I do.
What does mean?
It's a lot. I know it's a lot. It's a big project, and it would take a couple of years. But I've got a partner. Actually, I didn't mention. So he's more willing to actually. He said he would go live in one of the units and take care of some of the stuff. So
do the deal.
That's part of my
motivation
too. Yeah.
It's over. Do the deal. Yeah. If you got that, do it.
I don't know.
Depending
on what kind of partner that is.
I say if you could go 800,000 or lower, and you got and he's legit, your partner's legit, and he's willing to do that, and he's willing to do everything he's willing to tell you to do. I mean, obviously, I'd wrap the whole thing up in paper, do it right, put everything in the operating agreement as you can. But based on what I'm seeing here, I think you should go for it. I'm gonna be optimistic on this one. I'm gonna say yes.
All right.
Stamp of approval.
There it is.
Yeah.
Done. Sold.
Well, so
I appreciate that.
Yeah, no, absolutely. So there's a lot of moving parts for sure. Yeah. So a couple moving parts that I'm skeptical. For me, it's a maybe. It's still a maybe because I'm naturally a numbers guy. I like to calculate. I like to be analytical. I'm cold hard truth about what the numbers say. Price has to come down for sure, 100%.
Well, that's what I mean. If you can get you can get it for 800 or lower, do the deal.
Next thing is, do you already have a contractor team ready to go? Do you have a full blown staff for repairs, or are you not ready with that yet?
Yeah, you got to get that. Let me tell you, based on my numbers, I set $200,000 in repairs and maintenance, deferred maintenance, without even looking at it.
200,000, you said?
Even with $200,000,
I think it's gonna be more than that.
Even with $200,000, even with $300,000,
you remember Plano, right? You remember the Plano deal.
This isn't Plano, dude.
You know, he's it sounds like it because prison mates live there. You know, the seller is a total slumlord. I mean, letting this go.
But Plano was literally in the middle of a bunch of crappy other multifamily buildings.
I'd say, that's a slam. That's good on there. Repair team needed. You got to have that team. Your construction is literally going to be your margin.
Well, you don't know that yet because you haven't walked the property. You don't know what the repairs are going to be.
Fair point.
You said there's a new roof. It might not be 200. It might not be as much as 200. It might be over. It might be under. But even if it's 300,000, you've got enough margins there. My big thing is I really doubt you're going to be able to refinance by the time you get the numbers up. By the time you get your numbers up, we're probably looking at 18 months from now. If you did the deal today, 18 months from now, 2 years from now, economically speaking, history tells me you will not be able to refinance. Banks will be a lot tighter. If you can, great, get your money out, do the next deal. Awesome, right? It's gonna pay to have cash in 2021 and 2022.
Yeah, but
that's the biggest question mark.
Yeah, and what you want to do, Scott, is you want to be at a place where you're still going to be safe without having to refinance. You don't want to put yourself in a position where you have to refinance, where this is going to be profitable. But judging that, if you can get the per unit rent up from 600, 800 unit, you're going to be at 240 gross, assuming 50% expenses.
800 per unit?
800 per unit.
So you're going 25 units times 800.
Right, that's 240. And assuming 50% expenses, that puts him...
no, so his expenses are going to stay the same. When you raise rents, the only thing that changes is if your taxes.
Yeah.
But whenever you do a value add property, your operational expenses typically don't change.
Yeah, but there's also going to be variable expenses that you're going to be dealing with, especially...
What variable expenses?
Well, right now he's at 76% occupancy, right? You reverse that number, 24%. The more tenants you have, more calls for maintenance. Now, I get that with maintenance, he's probably going to have newer amenities.
Yeah, exactly. His maintenance is actually going to get lower because there's less things to deal with.
So I would still be, I can sleep better at night knowing I'm calling in 50% expenses. I sleep better.
I like to be conservative.
Yeah,
sure.
Yeah.
So I'll tell you from experience that it's not.
I'm just going to go with whatever.
But let's say it is. Let's say it is 50%. Your debt service, man, if you go seller financing, $250,000 down, you get 3% seller financing. That's $30,000 a year. You're at $150,000 for debt service and operational expenses. Dude, what's wrong with $90,000 a year on this thing?
I'm happy with that.
I will be too. I think, if anything, I don't think you should refinance, man. Here's what I tell a lot of investors. Take the money that you're getting from refinancing and then take the number that you lose out in your cash flow because you refinance, because of the new mortgage, and calculate the return. Some people are getting a 15% return just by not refinancing. I mean, 15% is great.
Yeah.
You know, some people get 20, some people get 30. You know, I don't think refinancing is as good as everyone makes it out to be. But again, I'm a long-term investor. My philosophy is I like doing things that myself 10 years from now is going to thank me for. So that's not everyone. I get it. But man, dude, $90,000 a year sounds great. I say do the deal, man. Contingent on a couple things.
Why did you say that I should bet on not getting the refinancing done?
Yeah,
or
so
that it won't happen.
Yeah, so right now, if you look at what's going on in the market, banks are tightening currently with their lending requirements. They're going from 20% upfront equity to 25% upfront equity, and I don't see it getting any better. If you look at the landscape of the economy, if you look at the moratoriums, the displacements, if you see everything that's happening in the housing market right now, my hunch is that a year from now, it'll actually be the lending requirements for a bank is going to be significantly tighter. And a lot for banks, they're making you required to keep a certain level of loan to value ratio. And some banks might not even allow you to refinance. But if you have a bank that's good and they allow you to refinance, they're not going to have you take as much money, or it's going to be more costly to do it because of the timing of it all.
Gotcha. Okay.
Yeah.
That makes
but
sense.
like I said, man, you know, I get it. People want to refinance. They want to take their money and go do the next deal. But the income you're getting on this thing is solid.
Yeah, it's stellar. If it all goes
and
perfectly.
And Scott, you're in a great position to negotiate phenomenal terms for seller financing.
Yeah,
you're in a great position. I don't think you should. Waste
this slumlord guy's how old is he? Could we ask that? Do you know?
Sure. I'm not sure. I can try to find out.
Yeah, if this guy is an older gentleman, close or past his retirement age, he's gonna want to get out. No matter what, he's probably not sleeping good at night.
I think
worry about this thing.
I think we're done here. I think everything that needs to be said has been said. Scott, I think you should do the deal contingent on a couple things. Get your contracting team ready. Get that quote. Make sure you know exactly how much it's going to cost to get those units ready and get it elevated. Figure out how long it's going to take to raise the rents. Get your business plan together. And then seriously consider getting a phenomenal bank that's going to allow you to do the refinance. But honestly, my opinion, man, is it's up to you, but I don't even think you should do it. But yeah, get the business plan together, send it to us, and we'll take a look at it, and we'll give you even more thoughts off the air.
Cool.
Yeah.
Great.
But so far, the structure of it, there's room for profit. structure of it is structure. I don't see like huge red flags. Like,
Yeah.
you know,
So is that a? So you said maybe earlier.
I said maybe, but
Yeah.
I'm leading 60-70% yes.
Oh, so you changed your mind.
Maybe I did.
Oh,
Maybe I
I
did.
forgot to
don't know.
mention
Yeah.
he's also been paying the water, but they're separately metered, so that's another.
Interesting.
little bonus.
Okay.
Is it a customary thing for your area to pay for the tenants to pay water or the landlords pay water?
All my rentals, they have them pay the water, so
Okay.
I guess it's just dependent.
There you go. Awesome.
Yeah.
All right. Well, thank you, Scott. Appreciate it. Good luck.
Thank
Send
you.
us your
Hold
business
on.
Appreciate it.
Hold on.
Thank you so much.
Are we gonna put him in the Hall of Fame or not?
I said yes. I said yes 15 minutes
Okay.
ago.
All right. Well, then
Yeah.
there it is. Put him in the Hall of Fame.
Awesome. Congratulations, sir.
Scott. Yeah.
Living in the Hall
you
of
so much,
Fame.
guys.
Right. All right. Thank you, guys. Appreciate it.
All right, thanks.
All right. Take care.
Hey, what's going on, guys? This is Daniel. Welcome back to our recap for the show. Sam, what did you think about Mr. Scott?
A lot of good potential. Very strong foundation. Good potential. Really reminded me of the Plano deal, by the way. Just by like. Just by hearing all like the basic foundations, what he's talking about. Like I literally imagine Plano in my head, like while he was describing all this. For those who don't know, Plano was one of our deals we've done in the past. Very similar like to what we are seeing here. But no, I think Scott's going to do well. I can tell he has some experience doing single family things, and I can see he's trying to translate to some of the commercial world. But yeah, as long as he can get that rents up, price goes down, I think it's a good deal.
Yeah, I think it's a good deal. He should definitely do it. There's enough room in there. He sounds like a sharp guy.
Yeah.
If he came to us with nothing, then
Yeah.
I would have different thoughts. But this is the one where it really does depend on the investor.
Yeah.
And there's a lot of those, and I think he could do it.
Yeah. The fact that he already had Schedule E and he had some numbers already, with him tells
Yeah,
me that.
sure.
Yeah. It tells me
Well, he's
got a
done
good
real
start.
estate before, so
Yeah.
he'll be all right. Yeah.
Yeah.
Cool.
So
Hey guys, thanks for watching this episode of The Closing Table. Now, if you're interested in being a contestant on the show, go ahead and click on that link in the description.
all you have to do is fill out your information, submit it, and we'll reach out to you to see if you're a good fit for our show. Don't forget to like and subscribe, and I'll see you in the next episode.